We have to defer all of the policy making to the administration. They understand that the balancing national security versus the prosperity of American technology all over the world. We're exporting American technology, which is really terrific for the United States. That the world is built on Nvidia, on American standards. Nvidia is an American company, and our government and the administration would love to see us succeed. And so, finding the right balance is very difficult to do, but they're doing a wonderful job.
The U.S. banned Nvidia from selling its most advanced AI processors to Chinese companies in 2022, but Nvidia has modified some versions of its chips so they can be sold and comply to U.S. regulations. Nvidia stock has nearly doubled this year due to a boom in artificial intelligence. To support the growing industry, executives like Huang say the U.S. needs to invest more heavily in expanding energy infrastructure for the sector. Just last week, Microsoft signed a deal with Constellation Energy to use nuclear power to support the company's AI energy needs. I asked Huang if he felt nuclear is the way forward.
Nuclear is a wonderful way forward as one of the sources of energy, one of the sources of sustainable energy. It won't be the only one. We're going to need energy from all sources and balance the availability and the cost of energy as well as the sustainability over time.
Now, I did ask Huang if he's been in touch with either of the presidential candidates as AI becomes a topic on the campaign trail. He told me he hasn't, but that he trusts whoever wins the White House will do the best thing for the U.S.
Hold on to your seats because the semiconductor world just got a jolt that's sending shockwaves through the stock market. Imagine a powerhouse in artificial intelligence chips suddenly hitting a wall due to geopolitical frictions. Yes, we're talking about Nvidia, the titan in the AI chip industry, making headlines again. But this time, it's not about a groundbreaking technological innovation. Instead, it's about a significant dip in their stock prices, a ripple effect of China's latest strategic shift in buying habits. And in the crosshairs, not just Nvidia, but also other leading names like Advanced Micro Devices, Intel, and Qualcomm, among others. Let's dive into the nuances of this electrifying news which is reshaping the landscape of the semiconductor sector. Welcome back, everyone, to Investocracy.
Tough morning for Nvidia and some other chip-related stocks this morning. Let's get to Seema Modi talk about what's driving some of these declines. Morning, Seema.
Hey, good morning, Carl. Yeah, headlines tied to China seem to be weighing on shares of Nvidia, down about 1.5% at this hour. Beijing is reportedly urging its domestic tech companies to stop using Nvidia chips. This while ByteDance is said to be moving forward with a Huawei chip to build a new artificial intelligence model. It comes as the U.S. Commerce Department is expected to unveil new measures this October that would further limit China's access to U.S. semiconductors, including limits on sales of memory chips. Now, China remains an important market for the U.S. chip makers, and Chinese tech companies are incredibly reliant on Nvidia, with reports of smuggling Nvidia's chips in and accessing them through U.S. cloud service providers like Amazon and Microsoft. That's why analysts, including those at Bernstein, say further restrictions would certainly be a headwind for the sector. The SMH ETF coming off 3 weeks of consecutive gains. We've had a positive month, down though right now by about 1.5%. Sarah?
Okay, thank you, Seema. It's not helping the overall averages, especially the NASDAQ, which is down a little more than 0.1%. Nothing extreme because Apple, for instance, is balancing it out. It's gaining today. The S&P, there you look at it. Strength in real estate, staples, energy, communication services, healthcare, and utilities. Weakness in tech, financials, consumer, and materials.
The news that has rattled the stock market is the Chinese government's reported decision to discourage local companies from purchasing Nvidia's GPUs. This move is a direct consequence of ongoing trade tensions between China and the United States. Bloomberg reports that Beijing is urging its tech companies to source from indigenous chip makers rather than rely on Nvidia's high-performance units. As expected, Nvidia's stock saw an immediate reaction, plunging by 2.8% in pre-market trading and ultimately settling down 2.2% at the close, hitting approximately $121. Amid this geopolitical chess match, Chinese AI chip maker Cambricon Technologies surged by an astonishing 20% on Monday. This shows that Beijing's push is not just rhetoric, but is already being embraced by the market. Meanwhile, the broader PHLX semiconductor index wasn't spared either, dropping by 1.2% in early trading. Even Nvidia's rivals felt the pinch. AMD saw a modest decline of 0.6%, while Intel fell nearly 2%, and Micron, a close partner of Nvidia, tumbled by 3.4%. The backstory is critical to understanding the present scenario. The U.S. had tightened export controls on AI chips to China in late 2022, taking a page out of its strategy book to curb China's advancements in the AI domain. Nvidia's fiscal year data showed that sales to China accounted for 14% of their data center revenue, down from 19% the previous year, indicating the tangible impact of these restrictions. However, Nvidia has been anything but passive in this situation. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
China remains an important market for the U.S. chipmakers, and for China, Nvidia is an increasingly important supplier, despite U.S. export controls that prevent the company from shipping its most powerful AI chips into the country. The Chinese are going as far as smuggling Nvidia's chips into China and accessing its GPUs through U.S. cloud providers like Amazon. And while Chinese tech giant Huawei is trying to build up its own AI chip, Brian, we spoke to a number of experts. They don't say it stands up against what Nvidia has on the market. And Nvidia is also said to be working on a China-specific chip that appeases current U.S. export controls. But as we've seen in the past, pressure from Beijing has worked. Case in point, the U.S. industrial sector, where companies like GE and Caterpillar are now facing more competition on the ground from Chinese competitors.
Does this feel a little bit like a you poke me, I'll poke you, Seema, because we've been layering some, since the Huawei days of a couple of years ago, we've been layering these restrictions on Chinese products here, and it just feels like you do wonder, is this more of a real, where they're, China's really concerned about Nvidia versus you're going to do it to me, I'm going to do it to you.
I'll do it to you. Exactly. In fact, it comes just weeks ahead of what we're expecting is a U.S. commerce rule on limiting U.S. memory chip sales to China. So to your point, this may just be China trying to take a step forward here as we, of course, wait the winner of the presidential election, where there is bipartisan support from Democrats and Republicans to be tough on China. Brian.
Seema Modi, a big headline there, and just another sort of tit for tat China-U.S. relationship. Seema, have a good weekend. Thank you.
Nvidia has ingeniously found workarounds, such as launching modified versions of their chips tailored to comply with the stringent export rules. For instance, the recently launched H20 Hopper chips for China are projected to rake in a staggering $12 billion in revenue this year alone. Furthermore, the ripple effects of this policy shift are being felt across the semiconductor ecosystem. The United States has been keen on securing its technological edge, and this latest move by China could accelerate the bifurcation of the tech supply chain. The semiconductor sector could soon witness an era where Western and Eastern markets are increasingly isolated, each developing and deploying their technological solutions independently. This not only impacts major giants like Nvidia, but also the myriad of smaller firms and startups that rely on a global supply chain and international collaborations. But even with these countermeasures, the stakes remain sky-high. As D.A. Davidson's senior analyst Gil Luria pointed out, if the U.S. more strongly enforces the limits on sales to China, and China more strictly enforces the limits on its own companies, it would have a very detrimental impact on Nvidia. The sentiment echoes across Wall Street, though with an optimistic twist. Despite current tribulations, 90% of analysts recommend buying Nvidia stock, buoyed by the staggering 144% increase since the beginning of the year. Projections even place Nvidia's stock rising to around $147.61 over the next year, according to Bloomberg consensus estimates. Let's not forget, in the frenetic world of semiconductors, volatility is par for the course. Today, it's trade tensions and export controls. Tomorrow, it could be a breakthrough technological advancement or a surge in demand. The path ahead for Nvidia may be laden with regulatory red tape and market uncertainty, but this is also a company known for its resilience and innovation. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I know it's too soon for you to talk about this company specifically, but at least it raises the issue of companies that are out there that want a piece of this AI pie. How should we be thinking about these newcomers relative to the heavyweights like Nvidia?
Yeah. So there's a number of areas of competition for Nvidia, which makes sense. It's an enormous potential opportunity, and all the dollars right now are flowing to Nvidia. And you've got other merchant suppliers like AMD or even Intel. You have hyperscalers doing their own products, and then you have startups as well, right? And I think for a lot of the startups, it's difficult. They don't have scale. They don't have ecosystem, and if their pitch is, we have a chip that's better than Nvidia, I think that's hard because, with every generation, Nvidia has a chip that's better than Nvidia, and they have the software and all the ecosystem support that goes with it. So, I'm not going to comment on Cerebras, but they're doing some other things. I mean, clearly, they're gonna try their best at this point. But in general, so far it's been a winner take all. And I always, as I've said this before, it seems like it's Nvidia's game to lose, like more broadly.
So, what's the bottom line for potential investors eyeing Nvidia? Despite the hurdles and the immediate stock dip, Nvidia remains a strong contender in the semiconductor world. With ongoing innovations and a robust strategy to navigate geopolitical challenges, Nvidia's long-term outlook appears promising. Current forecasts suggest that the stock could appreciate to $147.61 over the next year, reflecting underlying optimism among analysts about Nvidia's ability to adapt and thrive. Nvidia's unwavering commitment to innovation, coupled with its tactical moves to circumvent trade restrictions, underscores its potential for sustained growth. The company's proactive measures, such as the introduction of the H20 Hopper chips and the imminent B20 Blackwell series for China, are preparatory steps to secure a foothold in the competitive market, even amid regulatory barriers. On a broader scale, the semiconductor industry is undergoing rapid transformation. With the rise of emerging technologies like quantum computing, 5G, and autonomous vehicles, the demand for advanced AI chips is expected to soar in the coming years. Nvidia, with its extensive portfolio and commitment to R&D, is well-positioned to capitalize on these trends. Now, we turn the spotlight to you. With Nvidia shares having a remarkable year-to-date increase of 144% and ambitious projections still in play, what are your thoughts on diving into this dynamic stock? Are you ready to bank on Nvidia's unwavering drive and strategic maneuvers in the face of market volatility? Share your views and join the conversation as we navigate the ever-evolving terrain of the semiconductor industry together. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.